Hey, what's up guys? Bitcoin has the potential to eat other markets around the world. In this video we will take a look at some bullish Bitcoin indicators, then one and only Saifedean Ammous will explain his Bitcoin price prediction. Let's take a moment and look at the Bitcoin price action. Right now Bitcoin is trading slightly higher than $19,000 as of the time of this recording. We have this more or less ascending triangle, which means Bitcoin has high chance of breaking upwards. It can take few days, it can also take few weeks, but it looks like it should happen before the end of 2020. Let's zoom out a bit and look at the bigger picture. In 2017 bull market run, we also visited $19,000, but just briefly. This $19,000 unsurprisingly became a resistance level at this current moment. However, if we break from that triangle and surpass $20,000, then it will be just a new price discovery mode. BTC can easily hit $25,000 or even $30,000 soon after. This video is presented by Hacken Group. Hacken provides a range of cybersecurity services for businesses and individuals. Hacken works with businesses such as Binance, VeChain, Chainlink, CoinGecko, CoinMarketCap, and much more. The main service is Hacken.io, B2B, cybersecurity consulting. There is also Hacken.ai, B2C, all-in-one personal cybersecurity application to protect your online information. Also, Hacken has its native cryptocurrency HAI. It's primarily used as a payment for services and wealth distribution to its holders. Just in 2020, this token skyrocketed by more than 10x, but since then it dipped a bit and could be undervalued. Investing in growing blockchain cybersecurity industry leader is like investing alliance in the race of the life insurance industry. Hacken will select 5 winners of $100 HAI. To enter the giveaway, check your email in Darknet Monitoring, download the Hacken AI app for iOS or Android, and write the comment how many leaked emails you have. All the links to Hacken will be in the description box below. Now, let's take a look at the more fundamental aspects behind Bitcoin price. Very interesting chart. It represents Bitcoin exchange net flow. On the x-axis we have time, and on the left hand side of the y-axis we have 7-day moving average of exchange net flow. And on the right hand side we have of course Bitcoin price. First, let's notice that when Bitcoin was below $5,000 back in March, when the perception of coronavirus slashed the Bitcoin price in half, investors start depositing their BTC into the exchange, and what it looks like, they were buying even more at those low prices. When Bitcoin price starts to pick up, investors start to leave exchanges and take Bitcoin into their own hands. In the summer, the net inflow spiked again, and the price slightly increased as well. As Bitcoin price was going up, the net outflow from exchanges started to increase. Now, we see another Bitcoin inflow spike. I know it sounds a bit counterintuitive, but historically, when Bitcoin inflow spiked, it caused the price to rise. Will the Bitcoin inflow cause the price to rise once again? We will just have to wait and see what happens. Overall, investors move their Bitcoin away from exchanges into the cold storage, therefore, marketable supply is shrinking as no one wants to sell their Bitcoin. Another very cool chart. The number of Bitcoin addresses with at least 1000 BTC continues to make new all-time high. 1000 plus Bitcoin, that would be a lot of money. At least $19 million per each wallet. So far, there are more than 2000 Bitcoin addresses with at least 1000 BTC in it. Those whales are not planning to sell. They want to buy more and more. There is always these feelings. I don't have enough Bitcoin, no matter how much I buy. In the future, I always want to buy more and more. I'm still waiting for that pullback to buy some more Bitcoin at the lower prices. If that doesn't happen, then it's fine, price will go up. If that does happen, I will expand my Bitcoin inventory. Now, let's take a look at this very interesting chart that was created by Plan B very recently. This chart represents the performance of different assets relatively to how much risk of volatility you have to take. For example, if you bought government 10-year bonds 50 years ago, you would have generated 7% annual compound rate with volatility less than 9%. Gold and S&P 500 have very similar performance, but with greater volatility. If you would bought Apple stock 40 years ago, you would have received 19% annual compound rate with around 75% volatility. Let's look at Google. It went public in 2004. If you would have bought Google at that date, you would have received 24% annual compound rate with 58% volatility. Then we have Facebook. Since it went public, you would have generated 28% compound rate with 34% volatility. Then we have Amazon and Netflix. Those companies would generated very similar annual compound rate with 35% with the great swings of volatility of around 80%. And finally, we have 10% Bitcoin and 90% cash since 2011 until 2020. With this combination, you would have generated more than 40% annual compound rate with volatility similar to 10-year bonds with around 8%. So this combination of around 10% Bitcoin and 90% cash would generate the best Sharpe ratio. Those of you who do not know what that is, Sharpe ratio measures the performance of investment compared to its risk, aka volatility. I know on Wall Street and in traditional finance people think that risk and volatility are synonymous. However, I would argue that this is so stupid. It is important to remember that stock market, gold, Bitcoin are volatile. Volatility is not the measure of risk. Just because stock, for example, goes up or down by 10%, it does not mean it is more risky than the stock that goes up and down by 2%. Warren Buffett has actually a very great definition of risk. Risk is a permanent loss of capital, or risk can also be a poor rate of returns. According to that definition, Bitcoin is not risky. Bitcoin did not collapse to $0 and it outperformed everything in existence. So I would not go 10% in Bitcoin and 90% in cash just because I'm petrified of volatility. I would do the opposite. I would go 90% Bitcoin and 10% cash. And who gives a shit about volatility in the first place? Volatility just creates opportunities. Remember that. Okay, let's move on. Saifedean Ammous, the author of the most popular book in cryptocurrency space, Bitcoin Standard, recently had a great interview where he shares what he thinks about Bitcoin maximalism. Is he Bitcoin maximalist? Let's take a look.
Your book is called The Bitcoin Standard. Obviously, you're very enthusiastic about Bitcoin. Are you a Bitcoin maximalist, meaning you think it's going to be a winner-take-all type scenario in the digital asset space where Bitcoin is going to be the overwhelming winner and you're going to have maybe a few other coins out there that lag well behind Bitcoin? Do you think this is a space that's going to develop as a mature asset class and you're going to have other coins and cryptocurrencies and digital assets that have tremendous value as well?
No, I think it's Bitcoin or bust. There's really only one protocol, one neutral protocol here, and there's only neutral protocols here. I think the use case ultimately of the tokens that underlie value transfer, it has to be one protocol, and it's and the only one that can make a claim for being a neutral protocol that is controlled by nobody, that isn't controlled by anybody, is Bitcoin. And that's really ultimately, it's what I see as the value proposition, that it's the guarantee that this thing should have value. The reason that these digital bits of data are able to have economic value is because there's a guarantee that nobody can go and change the supply, which is trivial in my mind with all the other digital assets. So none of them can demonstrate to me that they have anything like the resilience that Bitcoin has. Because we saw with Bitcoin in 2017, some of the most influential Bitcoin companies and some of the most influential Bitcoin developers and some of the bigger investors in Bitcoin all tried to change one simple metric and parameter in the Bitcoin network and failed. But you don't see that happening with any of the other currencies, which are, to be frank, after Bitcoin, if any of these has made a name where people have heard about it, it only made that name because it had a group of people behind it working in a concerted effort. And for those people, changing the supply and controlling the supply is more or less a bit of a trivial problem. And we've seen with some of the bigger ones that they've been, they don't even know what their supply is going to be like. So for me, I think the value proposition is just not there in having any of these digital tokens attain the scarcity that is necessary for them to have reliable market value in the long run. And that's why we see that, a lot of these copycat coins come into the Bitcoin space. There's a lot of hype initially, but then eventually they crash and they essentially they all flatline and head towards zero next to Bitcoin. It's happened with thousands of them. And I think, we're still at a point where in terms of market cap, which is a very flawed measure, Bitcoin is about 70% of the market. But in terms of real world liquidity, the real world liquidity for the other currencies it's likely more likely that Bitcoin is about 90% of the total real liquidity, not just the kind of market cap, which can be easily spoofed. So if we're talking about a world in which the market has for 11 years, after 11 years of all these thousands of competitors coming in, and they still can't get to more than 10% of the liquidity of Bitcoin, I think it's time to consider that this is not Pepsi and Coca-Cola. This is not different providers of different software packages. This is a neutral protocol versus really proprietary currencies. And it's more like there's the internet, and then there are other people trying to sell their own local work network as being the other internet, but there's only really one protocol for the web itself.
He is a Bitcoin maximalist because Bitcoin is the only neutral and decentralized protocol with limited supply. There were over 600 altcoins try to replicate what Bitcoin has and even change some parameters, but they all have failed miserably. However, I believe other platforms such as Ethereum have a bright future. It doesn't pretend to be a Bitcoin, it's very different and it solves very different use cases. I think Ethereum and a number of other platforms alike can do well, but Bitcoin without a doubt the safest bet you can make. Now, let's take a look what Saifedean Ammous has to say about his Bitcoin price prediction.
Bitcoin being digital gold or an alternative store of value. And some people enjoyed your last slide comparing the total value of the FX market. What do you think the ultimate market cap for Bitcoin could climb to? Is it capped at, basically taking some market cap from gold and those two assets being your two main alternative stores of value, or how large of a market cap do you think Bitcoin could eventually have, and what's the path to getting there?
Really, it's a scary question to consider because you try and draw the line on where demand can stop, and you keep struggling. So you could say gold. I think demonetizing gold is a realistic goal, and turning gold into an industrial metal. That can happen. So Bitcoin can eat that market. It won't mean gold will go to zero. Obviously, it'll become just an expensive industrial metal. But you have to also remember that a lot more of global markets are essentially just looking for a store of value. Or they're not looking for investment that yields returns. There's a lot of money that is just looking for store of value. And so a lot of real estate, a lot of people buy homes that they don't really need because that beats inflation. And a lot of people invest in all kinds of things, and like bonds, for instance. So Bitcoin could eat into the market for real estate, could eat into the market for bonds. And so these things could lose a significant amount of the demand that comes to them because people don't have a solid store of value that can just offer them, that can be the base of your portfolio that you don't take risks with. And Bitcoin, if it grows into this kind of digital gold, it can offer people that. And so you can imagine then it would reduce the demand for other markets. And then really, the sky's the limit, I guess.
Saifedean Ammous said Bitcoin can overtake $10 trillion market cap of gold. He also mentioned that Bitcoin can capture some chunk of real estate market. The housing market in the United States is worth more than $33 trillion. And he also mentioned 100 trillion plus bond market. Well, sky's the limit, it's an ultimate prediction. But let's elaborate a bit more. Suppose Bitcoin can take 20% of each market. 20% of gold market, that would be $2 trillion. 20% of housing market, that would be $6.6 trillion. 20% of bond market, that would be $20 trillion. Everything together, that would be $28.6 trillion. If Bitcoin market cap would be $28.6 trillion, one single BTC would increase by more than 80x from the current price. That would be over $1.5 million per single BTC. Let me know, what do you guys think? Can Bitcoin capture those market shares and eventually hit $1.5 million? Leave your thoughts in the comment section below, smash that like button and subscribe.